As head of global research at DTZ, I'm very excited about the combination of UGL and DTZ because I think going forward we'll be able to provide our clients with an integrated global platform of research and views on markets. And so for me and the team at DTZ Research, the UGL combination is a very positive one. And in talking with clients, I think they share that enthusiasm. The problem really is that we have had a nice recovery after the recession in 2009, but the outlook's still very uncertain at the moment. And of course, a lot of that is related to government debt issues. There's a lot of focus on Europe at the moment. The sovereign debt crisis has been ongoing for the last 6 months, and people don't really know what to make of it. So it's still highly uncertain at the moment. The outlook for Asia is still quite good. In the base case, we certainly expect continued, even though a slightly slower growth. A lot of the government policy also in Asia, especially in China, has been focused on slowing down the growth a little bit because inflation has been getting out of control. But if we see a recession coming through in either the US or Europe, which is why people are uncertain at the moment, a lot of these economies are still very export driven, which means that if their export markets go down, there'll be an impact on Asia as well. So they're linked to the global economy in a lot of different ways, and so for them also the outlook is uncertain, even though the momentum is still quite strong. The demand outlook is just tied to the economic outlook. If occupiers are finding it difficult to assess whether their clients are going to be expanding or contracting their demand for their goods and services, that will impact directly on their expansion plans, whether they're going to take more or less space. So that's on the demand side, and we sort of had this period of risk on and risk off, where people are changing their expectations quite drastically, and we're back into a risk-off period at the moment. On the supply side, I think what is has been a big trend is really again related to debt, and the debt issues in commercial property are also quite severe, not just with governments, but now also with commercial real estate. And those have been impacted on both new supply coming in, which has been more limited than in previous cycles, as well as I think for occupiers it's important to realize how legacy debt is impacting on the owner of the property. Because if the owner has problems with their bank because they can't refinance the loan, they might behave in certain ways where they might not be reinvesting in the building. You might actually see some strange behavior with deposits and things like that, because at the end of the day they don't own the building, they are in negative equity. And so there's a lot of complications that impact the supply and demand at the moment, and of course that is all related to the macroeconomy. I think if we look at the base case, the occupancy costs have actually increased in 2011, but if you compare it to inflation, global inflation is still well ahead. And even compared to Asia Pacific, as you mentioned, growth has been very strong in Asia Pacific. Even though we expected maybe going forward to be a little bit slower, last year growth was still very good. Occupancy costs have actually been below inflation as far as the increase in 2011. So that's really good news, and I think occupiers should be very happy about that. And even going forward, in our base case scenario, where we sort of see a slowing down of growth, but still quite good momentum in Asia, in the base case we are seeing Asia Pacific occupancy costs on average across all the markets that we cover just ahead of inflation for the next 5 years. Again, quite big differences between markets, but on average just above inflation. So for occupiers, that's not such bad news. For the occupancy cost, there's going to be a big impact from the downside scenario. So if I look at the downside scenario, which is basically a Eurozone breakup type of situation, the impact on Europe is quite significant and sustained, so there'll be cost savings for occupiers to be realized in a longer period of time. For Asia Pacific, it's actually quite different. So for Asia Pacific, we see a big impact in the short term for 2012, but in the longer term, over the 5-year period, there's not a big difference between the base case and the downside scenario increase in occupancy cost. That means for occupiers, if they believe the downside scenario will come through, that the cost-saving window is quite limited for Asia Pacific, and that is for for most of the multinational corporations that are looking to grow their business in China and the rest of Asia. That's probably quite a relevant conclusion. And again, the differences between Asia and Europe are quite significant in that respect.